Hello and welcome to the stock specific class here for Thursday, October the 20th. As always, if you have any questions during the week or any questions I don't get to here in the live class, make sure you send those to Jerry at TradersPro.com. I'll be happy to answer those for you. All right, let's get started. Not much has really changed from the Tuesday update. So it'll make it'll make it more likely I can get this class done in an hour instead of going over that. The direction alerts are still the same. We're off the extremes. Momentum is in the middle here. Again, all we're looking for right here is I'm not saying all we're looking for, but the big focus on these direction alerts is the rubber band stretched one way or the other? Are we overbought? Where we gone up too far too fast? That would be over here on the right side. Or are we oversold? Where we've gone down too far too fast? When we're right in the middle right here, what this is telling us is we could go either way. Market could go up, it could go down. It's not stretched to either side. Now, why is that important to know? Because then we're going to go look at the charts. And then in the charts, we can tell from the charts will tell us where we're more likely to go up or we're more likely to go down. They'll tell us where the trend direction is. But these are telling us, have we gone down, but we've gone down a little bit too far. Now we could bounce or rally back up a little bit. That's what we're looking for as far as this down, at least being in the downtrend. And we're not. We're off the extremes. Well, for the most part, we're off the extremes. Breadth is kind of right on the borderline right there, but again, it's not. Usually, you're looking to see if it gets to that far right side of the extreme range, and it's not there. So we're in a position where we could kind of go either way, and that's what shows up on the charts as well. And I'll go through. Well, I went through a lot of those scenarios on Tuesday, but I'll go through them briefly today. Sentiment is backed off the extreme. We're in the high complacency area, but again, we haven't seen complacency get broken yet. That's where we keep talking about the VIX and the VIX spiking up above 40 and those type of things, showing panic in the market. We haven't seen that yet. We will at some point, but and that's why some of these indicators you just don't see changes in very often. I remember, for years, we were in the bull market and we were at the far right side of the bull market. And I remember the day in class where we finally switched into a bear market. It was like, holy cow, we're actually talking about the long-term trend, because it doesn't change very often. But when it does, it's significant. And so that's why they're on here. They're not things that you're going to be seeing change immediately or every day. But that is something to look for when we are moving bottomed out and we're starting to move back up in a larger new bull market. We'll see this indicator start moving this direction. It's going to be a while before that happens, but it'll start happening at some point in time. Buy sell ratios have come back closer together here, so that's not indicating any sort of extreme. This is where you'd look for how wide they've gotten. This is just comparing the number of stocks with buy signals with the number of stocks with sell signals. When there's far more sell signals and buy signals, you get this big extreme. When you have more buy signals and sell signals, you get stretched a little bit too. So all these indicators are trying to show us, is the market stretched one way or the other, and it's not. We could go either way based off of this. And same with the sentiment indicator. We're kind of in the middle of these two extremes. This would be overbought up here, and if you get up above there, usually expect the market to pull back a little bit. This is oversold down here. If you get at or below this green line, usually you're expecting a rally or a bounce. That's why it's green and red to kind of reflect kind of the buy and sell type mentality there. We're right in the middle, so again, we can go either way. All right, so that brings us to our charts. And here's the S&P. Now, I think what's significant about today's price action is that, we opened down a little bit. Here's where we opened, and then we started to rally off of that. And it wasn't until just about an hour or so ago that, maybe a little bit more than that, but the market started to slide back down. At one point, the Dow was up, I think it was up almost 400 points, and then it reversed, and now we're down almost 100 points. So that's significant. Now that could change. Maybe there's a late day rally, come off the lows. You can see yesterday we were all over the place. We opened lower. We tried to rally. We came all the way down onto these lows, and we rallied a little bit into the close, and it created kind of an indecision candle. We call that a spinning top candlestick formation. It just means indecision. It means neither the buyers or the sellers could figure out what direction they wanted to go. Now, you don't want to make any big decisions on an indecision candle for obvious reasons. The market is telling you it doesn't know where it wants to go. You don't want to assume that you do. But usually, so we're looking for a little bit more of a definitive direction. Now, Thursday we did have a pretty definitive candlestick formation, and we have the result from it, and that is that we opened higher. We gapped up at the open. Here's where we closed the day before, right here. We opened higher, and then here's where we closed. We closed lower than where we opened, but still higher than where we closed the day before. And so, again, at the market close on Tuesday, everyone was talking about how the market was up. That's good. It was a bullish day. Buyers were there, or whatever stories they were talking about, all the chatter on the news and all that kind of stuff. But the price action was saying, that was very bearish. The momentum is shifting. There's definitely selling momentum going on. I run into this a lot when I trade options, because if I see a pattern like that, I'm buying put options because I'm betting that the next day the market's going to go down. Most of the time, you're going to get a very high percentage of the time, you're going to get some sort of a downward move off of that type of price action. Okay. Now, candlestick formations are very short-term in nature. It's important you understand that. The price action itself can really only tell you what's likely to happen over the next day, maybe the next day or two. But if you can use the short-term price action with the longer-term trend, you can predict when some of these, or I shouldn't say predict because they're not perfect. Forecast is a better word. You think of a weather forecaster, most of the time they're right, but occasionally they'll say it's going to rain, it doesn't rain, or it's going to be sunny and it ends up raining. Forecasting is a better word for it, but it helps you forecast where those next trend moves can start if you can kind of combine the two. So, we have this attempted rally in the market off these lows. We have this big bullish reversal candle. That was a big bullish candle. Now, again, this shows you the imperfection of sometimes of these candles. The next day, it did open higher, so it did predict that it should open up within the next few days, but it reversed back down. Eventually, it did end up going higher off of that price action. And this is just the opposite. This is just a bearish reversal candle. It's happening after a rally up. That's where it's stronger. If this happens in any other spot, it's not as strong. If it's in the middle of a move or it barely moved up and then you get it, it's not a very strong indicator. But if it happens after a run up, it's usually pretty strong. And it doesn't always you don't always get the immediate drop. That's why it doesn't always work or work perfectly. But sometimes it'll show up and right before you get a big drop, meaning the market may attempt to rally in a couple more days, and then you get a big drop 2 or 3 days later, and you're like, hey, yeah, that was my warning sign that the buyers were weakening So it's a price action that I want you to learn and pay attention to, learn to recognize it and learn to pay attention to it. Again, it's not the crystal ball. It's not going to tell you exactly what's going to happen. And like I said, sometimes you'll just get a little move. I mean, basically, it's fulfilled what it was telling us. We have dropped lower from that price action, but it's not saying that we're going to go all the way down right here. We could now have another move up, and all this was predicting is in the near term we should pull back a little bit. So, I don't want you to suddenly look at this and say, oh man, this is going to tell me every time when the market's going to drop or have a big move down. It alone won't, but I'm telling you, all these little clues, you learn to recognize them, and it helps you make good trading decisions. If I'm in a stock and I think I'm getting near my target area of where I think that stock's going to go, and then I see a bearish reversal candle like that, I may take profits off the table. I may sell the whole thing, or I might sell a part of the position. Maybe I sell half of the position, just in case it's leading to a pullback. Or look, I'm looking to get into this trade, but it's showing a bearish reversal kind of like that. It might tell me to wait a couple more days. It might pull back a little bit off of that. I might get a better entry point if I wait a little bit longer. So, although these candlestick formations aren't perfect, and they're not the answer to never being wrong again, they can help you make better decisions. And it's all about probabilities. Again, there's a high probability you're going to get some sort of a pullback off of that. But there are times where it will remind you that it doesn't always work perfectly. Here was an example where it didn't drop immediately. 3 more days it moved up, 2 days it paused. So another week later was when it finally dropped. But it was warning you that, hey, this uptrend is you've been moving up, buyers are getting weaker, pay attention to that. And so this, we got that on Tuesday. Now, in the context here, we've also talked about how it's possible maybe this could be a bearish ABC pattern. Now we got to the discussion of irregular ABC patterns. I'm not going to get back into that discussion. So if you want to hear about that or learn about irregular ABC patterns and how rare they are, and how I really don't want to call this a regular bearish ABC pattern, you can go back and review that Tuesday class. By the way, if you're brand new to all this and there's a lot of training videos and a lot of information. If you go to and you can review these weekly classes, the recordings of these classes. If you go to the TradersPro channel on YouTube, so go to youtube.com, search for TradersPro, subscribe. It doesn't cost anything to subscribe, and you'll get access to not only these updates, recordings, but trainings on just about anything I could think of to do a training on, and you can see the different topics and review those. But so one of the possibilities we're looking at is this could be a bearish ABC pattern. We can start moving down. It seems to be looking like that's what's happening right now, as it's starting to make that next move down. But the other possibility is that, well, there's another one here where this is the low. This wasn't, this was just a quick correction like we had back here. And that this is just wave A. This could be wave B on this little pullback, and then we get wave C where we come up here a little bit higher, and then we come down. So the way we're not dropping very fast right here. Right in here when it started to drop, it just dropped. Right in here where it started to drop, it just dropped. Notice here was in the decision day. We didn't move down very much. Here was a day where we fought to try to go higher, and it looks like we're going to end up closing lower, but who knows? We'll see what it looks like at the end of the day. It's sluggish. It's not dropping very fast. Now we see this in a B wave, and that's what a B wave acts like. A B wave is a sluggish type movement. It's a false move. In fact, in an uptrend, a B wave is called a sucker's rally, because you get the upward trend. Here's the upward trend. You get the first sell-off right here. And usually on that first sell-off, everybody thinks this is the buying opportunity. Buy the dip, buy the dip, buy the dip, right? You always hear that in an uptrend. Every time the market pulls back, buy the dip. That first pullback, though, is just the recognition of that there's a pullback, and then it tries to rally. And the rally in a bullish ABC pattern is very sluggish. It just doesn't move up very quickly. In fact, very often there's a smaller opposite ABC pattern in a B wave, and it tends to be a little bit more choppy, more sluggish. And it's a sucker's rally. It's not the time to buy yet. It's when the early people are buying, and they're the suckers usually. That usually completes your wave B, and then you get the final sell-off right here, where all these people panic and get out because they were wrong, and then the smarter buyers are waiting for this right here, waiting for that next pullback. They get in down here, and they're the ones that push it up higher. But that B wave is a sluggish rally in an uptrend. So you'd think the opposite would be true in a downtrend, right? So you get the downward move. The term in a downtrend is sell the rips. When it rallies, there's a rip, sell it, don't buy it. That's because it's probably going to go lower. And so you get these quick rips right here, and then it drops. You get a quick rip right here, and then it drops. And so again, I think a lot of people are thinking this is the rip and sell the rip. But I think we'll have to watch this. But I'm telling you how it's acting, and it can change because, again, we don't know how today's going to finish. If today finishes way down like this candle right here, maybe it's right here right now, but by the end of the day, it's all the way down here. Then that's not a sluggish move. That's a pretty direct move. That's a pretty impulsive type move. But if we close where we're at right now or come off the lows a little bit, it looks a little bit sluggish, and that's what would happen in a downtrend. You get wave A is the initial rally. Wave, it starts to drop, but it's sluggish. It's not really dropping very quickly. That's wave B. And then you get another move up right here. And that's where everybody all the shorts start saying, oh, crap, we're not going lower. They start covering. And remember, when you cover in a short position, you're buying. That creates that wave C. And then you get the bigger drop after that. And so that's something we have to look for. It's possible that this is wave A. Like I said, this is wave B. If that's true, it'll be a sharp rally because, like I said, all those shorts that were coming in right here are going to have to cover. And short covering rallies are bigger rallies because it's panic buying. It's I got to get out no matter what the price is. I don't have time to get into the psychology of short sellers, but there's a difference between short selling and buying stocks. If you short sell, you can't let that position go against you very far, or it can not only could you lose all your money, but you could owe money because you're borrowing to short these stocks. You're borrowing from your broker to short the stocks, and so there's a different level of panic with short sellers. They have to make a decision. They have to close out those positions. So you could buy a stock at $50 and it could go down to $1 and your broker's not going to care and you may not care. Well, you probably care, but you're like, you can still own it. You could hold that thing for 5 more years and hope it goes back to $50. You can't do that when you're short selling. You have to make a decision. And so there's a different level of concern there. So, there's a possibility that you get this little rip right here. And I think this is an area here about 389 where there's a lot of support resistance. So if we do rally, that's the area you want to look for is where we'd rally to. And we shouldn't go above that. If we do, well, we have to start looking at other possibilities at that point. But and I'm not saying that has to happen, but that's one thing we want to look for is the possibility we get this little rip right here, okay? And especially with the way we're getting kind of a sluggish drop right here. And now this was sluggish, kind of rallying back up you had the big bullish reversal on Thursday, the drop down here on Friday, and then it gradually moved up on Monday and Tuesday. But in case in case we don't see this start dropping dramatically, or if we start to see it rally, that's what we're prepared to see. We're prepared to see it come up to about 389, and we'll go from there at that point. Okay, but overall, all that would be is just still delaying the inevitable, which is we'll get a bigger move down at some point. And if you want a fundamental reason for it, I'm probably not the person you want to listen to for that. But and you have a Fed that is hell bent on slowing the economy down, and we're not seeing the signs yet of it that it's slowing. We're not seeing unemployment go up yet. Earnings reports are coming out. Everyone's saying, "Oh, these, Netflix had these great earnings, and this company had these great earnings." That's bad news. I don't think that the market hasn't realized it yet. But you think the Fed is looking at that saying, "Oh, well, then maybe we shouldn't raise rates"? No, because they need everything to slow down. And if the earnings are still good, well, hey, add another rate hike in January. Then we already are going to expect it for November and December. We have it. We're not getting close to the end of the hiking cycle then, if that happens. So it's twisted, it's demented, and it's scary for a lot of you that are, especially if you're working paycheck to paycheck and you're not sure if your company will lay you off or not. That can be kind of scary, but that's what the Fed is trying to do. So just be aware of that. And so any of these rallies, I figure that ultimately will lead to another move down. We're just trying to see if we can get any early clues of ahead of time of when that might happen. By the way, it's something that I've got to pay attention to as far as hedging the portfolio. We'll talk about that when I get to the portfolio. Do we hold the SARK or the SOXS? Those are going to hedge us if the market drops. Those will go up in value. If I think we're going to rally higher, I'm going to get out of those, because why lose money on those when hopefully on that rally I'll make money on all the long positions I'm in. All right. There's a question on Qualcomm. I'll wait till the end of class to answer that, because it's kind of off topic there, but we can look at that. I guess before even looking at the chart there, I could say that in a downtrend, any stock could have a short-term rally, just like we're talking about right now. There's a possibility that we could go either way right here. Ultimately, things should go lower, but in the near term, you could always have a near-term jump or rally or something like that, and sometimes that's why you got to be real patient, especially if you're trading options. You got to make sure you have enough time on some of your positions in that situation. And I don't want to get too much into option trading in this class. This class is not really designed for option trading. The Wednesday class that I teach is more designed towards option trading. All right. Hold on just a second here. All right. So let's go to the Dow. Again, most of these are going to show kind of the same thing. The difference in the Dow, though, if you remember, was that we didn't really go lower here on that Friday reversal. So this could be a bearish ABC pattern right here. But again, maybe it's not done with the C leg. It could still rally up a little bit further there and still be wave C. It could come up into this area here and be wave C, and then we drop. So that's why in this case, it doesn't necessarily matter so much how we're drawing the pattern. I don't get too hung up on the pattern. What I really focus on is, instead of focusing on A, B, C, that's not every stock makes an exact A, B, C move. What I look for, and this is what I teach in the trend analysis recording on YouTube there, is you look for impulsive versus corrective. Impulsive is when you're moving sharply in a direction. So, and if you're in an uptrend, you're moving up, 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 up. Corrective is more choppy, more sideways. You're back and forth. And what you know is that stocks tend to alternate between impulsive and corrective moves. When we're done moving choppy and sideways, you get an impulsive move, and then you go corrective, and then you go impulsive. By the way, what causes this? Well, you get a jump in price, and then the buyers and sellers reevaluate what happened. Okay, what does that mean? Are we going higher, or is that it? We're going to lower. We're going higher. So it's back and forth. And then usually you'll break in the momentum of the direction you're already moving in. That's physics right there. You know, an object in motion is more likely to continue in that motion. Right? I don't know if I worded that right. I'm not a physics person, but I remember hearing something like that in class in college. It takes a lot more energy to reverse a trend or reverse a move, right? It happens. A car that's rolling down a hill, you could start pushing it up a hill if you have enough people pushing it, right? Enough force pushing it in the opposite direction, but it's harder to reverse that move, right? It takes more energy to reverse that move. And so, you know, when in trading, you try to look for the path of least resistance. In a downward trend, it's just the opposite. Your impulsive moves are down, sell, sell, sell. And then you reevaluate. You can be more choppy, more sideways. Buyers and sellers trying to figure out what that means. Is this the bottom, or is there further to drop? And then usually you're going to resume in that direction. Very often when trends reverse, you go from impulsive, corrective, impulsive, corrective, impulsive down, impulsive up. That's something I look for all the time. And then what should happen is the process should reverse. You should then get corrective here, impulsive, corrective. Now it's acting like an uptrend. When you get to a top, very often you're going impulsive up, impulsive down. You got impulsive up, impulsive down. And then you get the little stair steps. You start stair stepping your way down. So you have this big move down, and this is choppy. This is sluggish. I don't know when that's going to end, but ultimately it should move lower. And how do you know it's not going to just keep going up? Sometimes it will, because that's an overly simplistic way of explaining trend analysis to you. Is that, you know, impulsive corrective, impulsive corrective. Could it be that this just starts steadily moving higher and higher and higher? Yeah. But if you're going to ask me what are the probabilities based on the chart behavior, I'm going to say we're still moving lower, because what you'd want to see at a bottom right there is you'd want to see impulsive down, impulsive up, and then you'd want to see corrective. By the way, we're going to see some of these patterns in the stocks that we're going to go over here in just a minute. All right, so the Dow, same thing. Qs look a little bit more like S&P, where, you know, this could be wave A, wave B, but notice the sluggishness of this pullback right here. Then maybe we get wave C that comes up here, and then we drop. By the way, as we're going through this, the purpose of going through the market update is we're trying to determine the market conditions before we're making our trade decisions, right? Is the market more likely to go up? Is it more likely to go down? And the third choice is it could go either way. And a lot of what we're analyzing right now is we're saying it could go either way, right? Both from the standpoint of the direction alerts we went over first, what was that telling us? We could go either way. Now we're looking at scenarios where, yeah, we could drop from here. This could be wave A, wave B, wave C. We could drop right from here, or we could have one more move up and then drop. So ultimately, we still feel like the market's going to go lower, but in the near term, our analysis is telling us it can go. It's a coin flip right here. So having said that, and you know, we're in a stock-specific class, so there are stocks I'm going to go over today, but you got to keep that in mind that we're in a coin flip area right here. We don't want to be making too many decisions, and I'm definitely not saying go jump into everything we go over today in class. In fact, just the opposite. You more likely want to stay in cash or be very selective. But I am going to give you some ideas if you did want to put some money to work somewhere. Well, okay, is there stocks that look like they could be moving up despite the market going down or trending in the opposite directions? Yeah, there are some out there that we could look at and good reasons why we could consider those. But just remember that what we're doing right now is we're determining the market environment. Right now, a lot of clues are telling us it could go either way. All right. Are you talking about a inverse head and shoulders pattern on the SPYs and the Qs? The question was, could there be a high probability of a head and shoulders pattern forming? I'm assuming you mean inverse head and shoulders pattern or upside down head and shoulders pattern. So I know what you're talking about, because it's a possibility. What the possibility is, and that's why I'm assuming that's what you meant, is could this be an inverse upside down head and shoulders pattern, which is a bullish formation? Yeah, it could, but in that formation there, you very often you'll go up about the same distance as the tip of the head to the neckline. That would put you right up in this area right here, which is exactly what I think you could rally to if we rally. But just like no bullish engulfing pattern always works, inverse head and shoulders patterns don't always work either. So we're still in an area here where we haven't really formed the right shoulder either yet completely to be considered an inverse head and shoulders pattern. But absolutely, that could be that possibility, and that's what it's basically the same analysis as what we just went through. If we could still have a move up, it would probably come up into this area right here. Yeah, there's a number of reasons why it should come up in this area right here. If it is, one would be, okay, the inverse head and shoulders pattern, you can take the distance from the neckline to the head, project that distance upward. That's a target area, not perfect, but a possible target area. You could also say, if this is wave A, this is wave B. Wave C tends to be about the same length as wave A. That would put you right in that area as well. You could say you got support there, resistance here, support here. There's a lot of horizontal support resistance in this area. That all points to a target. So there's a reason why I immediately went to this area right here as the target if we rally, because there's a lot of reasons to believe that's where we could rally to. But to say that there's enough evidence right here that that's where the market is going, we don't have that yet. We have a lot of clues though that are pointing towards that possibility, and the biggest is this kind of the sluggishness of the drop right here. We should be really starting to sell off after that bearish reversal on Thursday or Tuesday. We didn't, and we're not. All right. But good job recognizing that. That's you want to be able to see those patterns start jumping out and use them in your analysis. All right. Bonds. I talked about the potential rally in bonds back in here and some of the volume that was coming into some of those bond ETFs, but man, those bond yields are going higher and bonds are dropping. Now what we start looking for, and the trend was still down, so that's one thing I did point out on Tuesday, is despite what I was seeing there, the trend is still clearly down. What you start looking for though is, do you start getting to the left side of the extreme range? We're already in the extreme range, but this is showing there's still more room to even drop a little bit further. But if you're looking to short bonds, this is not the time to be shorting bonds because there's an extreme reversal risk, and that's what reversal risk means. Not that the bonds are going to start reversing, going to an uptrend necessarily, but there's a chance they could rally and alleviate that oversold condition. Now, it's important to keep in mind too that when there's an extreme reversal risk, it doesn't always mean that bonds would have to rally to alleviate that extreme risk, extreme reversal risk. It could mean that it moves sideways for a while. A sideways move can alleviate an oversold or an overbought condition. So just be aware of that, because if you're thinking, man, there's a good chance it's going to go up from here. Who cares if the trend is down, I can make some money if it rallies back up. Well, the danger in that is just in the reward to risk. If I'm in a downtrend and I'm trying to trade the rallies within the downtrend, I got to time that rally perfect. I got to get in right when it starts, and it's going to be real short. So I got to be able to get out exactly when it's done. That is very hard to do. And if I miss it, it's going to go quickly against me very fast. Well, why are you trading that direction? Why are you trying to trade these little bounces? Why not wait for the bounce? I could get in late on the next move down, and I could get out early on the next move down, and I could make a lot more money in the middle part right there. It's just your odds of success are so much better. And that's, if you're option trading, you have to understand that too, that if you're trying to buy call options on bounces, I do it, but I understand that they're riskier and they're less, you have to time them more perfectly, and you got to get in, get out. You can't be holding them for 3 or 4 days. You just have to understand the trend you're in and understand that the probabilities. And again, so that gets back to, I was trying to trade a little bit of a bounce back in here on bonds, and didn't work out for me. But I didn't take very much risk. I was actually using options. I didn't risk very much. Very, very small risk, so it didn't hurt me at all. All right, gold. Gold trend is still down. I'm not going to focus too much on some of these because I did it on Tuesday. Oil. Again, we're looking at this as a little bit of a pullback, an ABC within the uptrend. So you had impulsive down, impulsive up. I want to pay attention to this pullback. Is it a little bit more choppy, more sideways? So far, it has been a little bit. You had this sideways move right through here, drop down Tuesday when we had class at a bullish reversal candle. It's a bearish candle today, so it might not be done, but the behavior is choppy. It looks corrective so far. When it's done, it should lead to another move up. Oil right now is really the main. It's really the only thing I can look at right now is it's the opposite of the market, where I just feel like oil is going to go up. It could be back down in the near term, back and forth in the near term, but ultimately going into the winter right now and seeing the demand out there that's going to start picking up here pretty quick too. Right now, today where I live, it's 70 degrees today, but I know I've lived here long enough to know that you get that at the end of October, as you get to the end of October. But I know what Halloween's like. It's almost always high 50s, rain possible, and then a week after that, you're almost in you get your snow and stuff start coming. In fact, we might get snow this weekend. That's how quick it could start dropping. So demand for oil is going to go from, it's okay right now. I haven't used air conditioning or heat for the last 2 weeks. None. But I'm going to be using heat next week, and I know this weekend probably, and I know it. That's how quickly now all this demand for energy is going to start kicking in. It's going to kick in fast, and now it lags a little bit when you start looking at some of these stocks, but there's going to be big demand for energy, going through the winter. Just knowing the demand problems in Europe, it's going to be. That's where you would want to be as far as looking for bullish trades. Very little else, because everything else is likely to go lower. And again, the Fed wouldn't mind seeing higher energy costs, because that is going to lead to less money being spent elsewhere, and that's what they want. They want to see you spending less. All right, so the dollar's clearly moving sideways right now, okay? And so we have this big drop right here. So this is our key metric here to determine trend continuation or trend reversal right here. bullish if it breaks out above here, bearish if it breaks down below there. Because this could be wave A, wave B, wave C. We talked about that, then going higher. But if it starts breaking below here, there's a lot of support resistance in this area here. That would be pretty bad, or negative, or I shouldn't say bad. It would be bearish for the dollar. It's acting though like it could be putting in a higher low right here. But if it works, you expect it to work its way back towards here and continue the trend. If it starts dipping down towards this low, then we'd have to start talking about potential trend reversal. But I don't see any reason for the dollar to drop significantly right now. But that can change very quickly. You know, sometimes these central banks in other countries will do something that will cause very quick currency fluctuations. But as of right now, the trend is still up. The VIX, a little bit of a bullish reversal candle here today. We like to look at the VIX on the actual VIX chart sometimes in class. I like to pull that in. So now we did one of the things I told you this week is, does the VIX dip down below 30? It did earlier today, but it's right back above it, and it's showing a little bit of a bullish reversal candle. So now, again, we don't have the market close yet, but if that closes like that, or if the VIX closes higher than where it opened, then you know, maybe we do have the drop right from here. Maybe it's signaling that could be the start of another move down. So maybe it takes out that rally possibility at that point. And we do have a situation here where the VIX is up right now, barely up compared to yesterday, and the S&P is down. So that correlation, you almost have a situation where the VIX is down, the S&P is down. That would be a little bit more of a bullish type situation. Remember, if the VIX and the market are moving in the same direction, you want to pay attention. If the market is down and the VIX is down, it's telling you that traders aren't too concerned about the drop. If the market is up and the VIX is up, it means that they're still buying, but they're worried about the rally, and they're buying protection. They're buying protected puts along with the stocks they're buying. So it's an early little signal of what those big institutional traders are thinking. So if we do have a situation where we're down today and the VIX actually is down or flat, that could be an indication that the professionals aren't too worried about a decline. That could be viewed as a little bit more bullish. Yeah, see, we're getting back to what I talked about, a coin flip. We're in a kind of a coin flip area, and be aware of that. Chip stocks, again, look at the sluggishness of the attempted rally right here. They tend to be a leading indicator. Again, could they pop up here a little bit further? Yeah, but ultimately it looks like they'll be heading back lower again, which really is one of the reasons why, unless we see the market start rallying, you know, I'm trying to hold on to that SOXS inverse ETF in the portfolio there. Dow Transports they've had a pretty definitive move lower. That could be something to pay attention to. That tends to be a leading indicator for the Dow Industrials. We'll see how that plays out. Bitcoin kind of flatlining right now. High yield corporate bonds are moving lower. This is another one that the market really focuses in on. That continues to drop down towards these lows. That would be a little bit more bearish there. If it comes off the lows of the day into the close, though, that could be viewed as being not overly bullish, but less bearish, I guess you could say. All right, so we come to the conclusion we're in a coin flip market. Quickly here on the portfolio, again, we're just kind of grinding a little bit higher, almost 135,500. NOC is still, actually today it's stalling out a little bit. So, you know, we're getting an indecision candle, and we're in the extreme overbought condition right there. You know, if we wanted to, we could get out of NOC and wait for the next pullback or something like that to get back in. I don't really want to be jumping in and out of it. I got to stop all the way down here, just trying to keep this wide stop, and we're just kind of holding it and letting it go. But again, that's something I could look at. Maybe I say, oh, maybe I sell half my position. In fact, let's do that. Let's just buy. I'm going to just sell half my position just to do something in the portfolio. On here. So let's go into the portfolio here. Let's see, I have only 20 shares, but let's go ahead and sell. Yeah, see, I'm not making very. I got in at 493, so we're not making a lot on it. But let's just go ahead and sell it. We'll sell 10 shares. And the current price was $511.34. So I'm going to make $175 about. All right. All right. So yeah, I've lowered risk exposure a little bit too. Now, what I could do is if it pulls back again, if it pulls back a little bit off of that, we could add those 10 shares back again or something like that. All right, so let's look at LNG. That one looks fine. Not going to do anything with that. And that's a natural gas one. Marathon Petroleum. It's a little bit of a bearish candle there, but again, I don't want to get out of anything oil related. It's acting like an uptrend, higher highs, higher lows, impulsive, corrective. We should get impulsive next, although it may not be done being corrective yet. It could come down into here and then go up. That's all right. No reason to jump out of this one. ADM, my stop's down here, so I don't see any reason to get out of that one. Tech, same thing. CEIX dipped. This is the coal stock. This dipped pretty good. That could be just a C leg of an ABC pattern. My stop's down below here, so hopefully it doesn't go down that far. Coal is something is going to be in big demand in the winter because you can transport it easily, and anyway, I think that's going to be high demand. I wanted to have some coal exposure to CEIX, CF. This one looks fine. Okay, our inverse ETFs, SARK. This has been moving up right here. And we still don't know. We could go either way here, so I'm going to go ahead and hold this. However, if we get a big rally day tomorrow, I'll jump out of these because I don't want them to just eat up the gains I'm making elsewhere. We're just using these to hedge. SOXS is down today, but it's a kind of a bullish reversal candle right there. By the way, that's bearish for chip stocks. This is the inverse of the chip index. I'm going to hold on to this to see if it rallies. But again, if we get a big rally and get a rally day in chips tomorrow or something like that, I'll jump out of these and we'll take a little bit of a hit in the process, but that's all right. We're just grinding away here on those in that portfolio. We're just trying to see if we can get to 136 or 137,000 by next week. That would be progress. All right, let's get into some stocks. Obviously, you'd want to stick to the top sector. Oil is going to give you the best chance of making money from the long side right now. And that's where most of this is going to be about that, because I just don't feel safe in too many other areas. Now, consumer staples is another area that's pretty good. But if you go into the hold section here of the oil sector, MTR right here, Mesa Royalty Trust, 99 strength rank. Switch the signals on here. Again, this looks like an inverse head and shoulders pattern, but the right shoulder may not be finished yet. But if it does break out, there's your neckline. Should go up about the same distance as the neckline to the base of the head. Again, this is a rule of thumb. Here's a high up here, so it should actually get back up to that previous high if it breaks out. But the reason why this is not exact, and you don't want to be saying, oh, it's going to go right to here, but it does it enough times. That's why we call it a rule of thumb, that you can use it as a target. It helps because then you're in the trade, you break out, and you're like, okay, it should get up here. It helps you stay in the trade when it's back and forth, because you're like, oh, it's a down day. Should I get out? Maybe it's going to go down. You're like, no, this is where it should get to. It helps you kind of weather that volatility back and forth when you have a target, when you know where it should get to. You know, how do you survive? How do you survive a drive? You know, how do I survive a drive from where I'm at to Vegas? Well, it's because every now and then I see the miles to Vegas go from, 300 miles to 200 miles to 100 miles. I have these targets that I can look for, and it helps me say, okay, I'm making progress. Just keep driving in that direction. All right. Question, why go to the hold section versus buy section? Now, I do this, typically this is the routine I'll use, especially in a bull market, is what I'm trying to do is a lot of times when you go into the buy section right away, you're going to get stocks that have been buys for a long time. You're going to see stocks that are all the way up here. What I want to do is I want to find a pattern that looks like it's ready to go. And then you're waiting, and then the entry signal would be to wait for it to go from hold to buy. So, okay, it's a hold right now, but it's got an inverse head and shoulders pattern. Okay, wait for the buy signal. Now, if it goes, now I can put this in a watch list. And again, this is really the routine we'll see when we're back into a bull market. I would put this stock, normally I'd put this stock in a watch list then in class. I'd say, okay, we're going to watch this one, and I'll set up an alert where it's going to tell me, it's going to send me an email when it goes from hold to buy. And then I've got it in my system. Then I just get the email. I'm like, okay, it's gone from hold to buy. Now I can get in it. And that's the process that we normally run. Now, the dilemma, the problem we have right now is that we're in a bear market. This is really a bull market software, okay? It's designed to find bullish trends and ride those bullish trends. The only really bullish trend right now is oil stocks for the most part. So all of what I'm doing right now is unique to a bear market. We're just trying to survive the bear market. The other choice, and probably the best choice in the bear market, is just go to cash. Don't do anything. Wait till you bottom out. But if I get in class here and say, okay, welcome to the market update. We're going to sit in cash, and the market is still a bear market. Have a good week. You're not going to tune in. I assume you're here because you want to get ideas. And so we're doing something different while we're waiting for the bear market to end. But that's why even in a bull market, that's why I don't go. I do go and check the buy signals a lot of times, because you might find some that just barely went to a buy signal. But that's part of what I'm going to do today. We're going to go. Part of what we'll do today is we'll go to the muscle stock tab and look at the new buys and see if there's good patterns or where stocks have just gone to a new buy. But I'm trying to kind of keep the system here where we're going to find these patterns, and then we're going to put them in our watch list, and we'll wait for this to go from hold to buy. Or you could wait for it to break out and buy the breakout. But that's kind of the normal routine. There's a question here on a couple of positions here. I could look at those here at the end of class maybe. I'll tell you on AMD. What am I going to tell you on AMD right now? Am I going to tell you to buy that or stay away from it? We just talked a lot about the chip sector. What were the patterns on the chip sector? What's the pattern on the market ultimately? There's your answer. That's the answer I'm going to give you on. I don't even have to look at the chart of AMD. That's what I'm telling you on AMD. And because this is not a short-term, what's it going to do over the next 2 days type of class, and even then, what have we come to the conclusion over the next couple of days? We could go either way. So, but that's probably the answer I'd give you on AMD. But I can look at the other one here in a second. Let's get through this. So MTR, I like this pattern here. Another one in the oil sector is some of these I'm already in or I've already talked about. So I'm just trying to find some new patterns here that we haven't gone over in some of these updates. SBR, kind of a similar, had this little dip down right here. But again, how do we observe this behavior right here? We have impulsive down, impulsive up, and corrective. What type of trend behavior is that? Uptrend, right? Impulsive up, corrective. Whenever you see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it's done moving sideways. Now, we could wait for this to go to a buy signal. We could wait for it to break out of here. We could wait for it to break out of here, which would probably be about the same spot. Buy the breakout. Or stay in cash is probably the best thing. Don't be in a lot of positions. Mostly be in cash is the smarter move. Be patient, because when you want to have as much money when we're done going down in this market, you want to have as much of your money as you possibly can to ride it all the way back up. Because then you can just get into all these stocks and just sit back and let it grow. All right, another one. Your oil. APA Corp 97 strength rank. And again, you're seeing a similar inverse head and shoulders pattern, neckline. You can wait for the breakout. Actually, it's looking like it's going to a buy signal today. Why isn't it showing up as a buy signal? Remember, all this updates overnight. Remember, so if this does stay at a buy signal, it'll be in the buy area tomorrow. It'll be into the buy section tomorrow. And this should be probably under the new buy, the muscle stocks new buy. Well, no, it wouldn't be in the new buy list because that won't update till tomorrow. But so tomorrow it would be in the new buy list and under muscle stocks. All right, under consumer staples, this is one I went over Tuesday, I think. But CTVA, I still like this one. Corteva, if that's correct pronunciation. Again, kind of a similar inverse head and shoulders pattern, getting ready. You could wait for the breakout, probably a smart thing to do. It's in the agricultural sector of consumer staples, which has been outperforming a little bit. And that's really what I would stick to is those, I did find a lot in some of these other areas that I really liked, patterns I really liked. You could go under the muscle stock tab right here and look at the new buys. I liked WTI right here, 98 strength rank. Again, similar. You're seeing the similar pattern, inverse head and shoulders pattern. So part of what I'm saying is these are all choices, but you're not going to be. I would say get into all these. Okay. Because that's not, you could see oil sell off. You could see the dollar somehow really rally strong, and that would make oil most likely go down. So you don't want to be loading up. But I just trying to give you some ideas. Marathon, again, these are all oil companies. Same thing, same pattern. This ERF, 98 strength rank, same pattern. Buy signal today, breaking out, or buy signal yesterday. That's why it's showing up today. It had the buy signal yesterday, but a nice pattern there. Again, these are all oil stocks. Devon. But that's what the software is designed to do. It's tell you where the bull market is, what's going up in this down market, what's outperforming, and that's what we've been in oil. We've been talking about oil and the oil sector for months now because that's really the only safe place to be if you're going to be anywhere. All right, let's get to a couple of questions I had earlier. I said I was going to bring up Qualcomm. Yeah, you had bought a put on Qualcomm. Yeah, but this is similar to what we've been talking about. This could be wave A, wave B. You could get another move up and then a drop. Let me switch this off of the signals now. Let's go to candlesticks. Hold on just a second here. It doesn't want to. Yeah, so how'd you deal if I were trading a put option out there? Ultimately, this should end up going down. It could go down right now. It could have one more move up and then go down. So how do you deal with that as an option trader? You deal with time. Ultimately, it should go lower, so your put should work. Well, you have two choices: either wait for the upward move and get a stronger bearish reversal candle. So we think it could have another move up. You wait for it, and then you buy your put option, or you just buy more time. Go out till first week in November or something, because it could rally for a couple of days, but then it's not going to take very long to drop. Stocks will fall a lot faster than they'll rise, so it probably only take 2 or 3, 4 days to drop. I wouldn't go out till next week though. That's not enough time. But that's how you deal with that is just through time. I don't want to get into a big option discussion, like I said, because it's not designed to be an option class. But and then hold on here. So software, the software are you referring as when you say software, is this software? Because this software is not really designed to be an option trading software. It's trying to show you trends that there'll be trending. So yeah, with a sell signal and a downtrend, it's telling you the trend is down. This is definitely putting you to a stock that's going down. And if you're going to buy a put option, you're definitely in the right direction as far as deciding on a put option trade. But it's not going to help you much with the timing of it that you'll need for picking expiration dates and things like that. So I don't know if that's what you were talking about, is using this software for it. You can, if you know how to really read candles and price action. But even then, a lot of option trades are shorter term trades, and these charts are delayed 10 minutes or so. So you don't have real-time charts because you don't need it for trend analysis. You don't need real-time quotes for trend analysis. I don't care what the chart looks like in the next 10 minutes. I might be in the stock for the next 3 or 4 months. What do I care about, So anyway, that if you're doing shorter term stuff, this software isn't designed for that. So you can still use it, but it wouldn't be as precise. You'd want to have something a little bit more precise than that. I'm not going to, there's a question related to the reversal app. I'm not going to get into reversal app stuff right now because that's even designed to be that's designed to, in a bull market, to put you into stocks that may have bottomed within a bull market and are getting, they've had big sell-offs and they could be ready to start big new uptrends. Right now, everything's dropping right now and probably going to go lower. So the reversal app isn't the strongest tool right now, and so nothing is. Like I said, in bear markets, the best thing to do is be in cash and not do anything. And if you are going to do something, you do it small and you do it in only the areas that are. All I want to do, I don't want to find something I think is bottoming right now. I want to find something that's trending up in a downtrend, because the bottoms of things right now are probably going to go lower. So I just wouldn't be messing around with trying to pick bottoms right now. Until when? We got to see a panic sell-off that spikes that VIX above 40. We got to see a panic sell-off. We haven't even seen that yet. And even then, I think we'll have more than one panic sell-off. We've got to get to a point where you feel scared to death to buy anything. And that's when you know that you're probably near a bottom. And, you know, if I can gauge that, if I have students that say, should I buy this? Should I buy this? Or I want to buy this. Hey, this is going to go up. That's a signal to me we're not at a bottom yet. When I start getting emails from me saying, Gary, this is scary. This is terrible. I don't know if I want to buy anything. And I'm going to say, well, now start buying. You're at a bottom right now. All right. I got to wrap things up here real quick. Well, here, just to pull up AMD, like I said, and this is, whenever you see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it's done moving sideways. Or it moves sideways, move down, move down, move down, move sideways, move down. When it was going up, kind of paused right here, moved up, paused, up. Now, could it have one more move up and then down? Yeah. In fact, a lot of times off these real sideways patterns, you'll get a spike up and then a move down. So the overall trend on AMD is down. I wouldn't go long on that at all yet. And then INDO, oil stocks. So, well, oil stock here. Well, here's my argument here. You say, okay, this is an oil stock. Could this be a bottom and it's going to start going up? And my argument would be, why hasn't it rallied already? Everything else is. Look at all the other stocks I pointed out that have already moved up and are moving up strongly off the bottom. Why isn't this one doing it? And you got to ask yourself, do you want the strong companies within the sector, or are you looking at this saying, yeah, but this is cheaper, and if it goes all the way back here, I can make that much money? And that's a bad way to pick stocks and trade. Who am I going to pick to win the 100-meter dash? Usain Bolt or the big fat guy eating a cheeseburger? It's possible that Usain could trip and the fat guy beats him, but what's the probability? That's the thing. Why? Why is this going side? Why is this flat dialing right here? You probably, if you dive into this company, you'll probably find they have a ton of debt and they might be going bankrupt. I'm not trying to jump on you, and that's why I never mention names in the class, because I don't want to embarrass anybody. But I want you to learn. And I want you to, this is not what I want you looking for. And I'm not saying every stock, you don't want to, there's never going to be stocks that are bottoming like this that you don't want to consider. Because I do like stocks that have these big dips down. They start basing, and then they start moving up the right side of the bull. I love that pattern, and I like to get in early on that pattern. But you notice the difference here, though. The difference is usually what you'll find is if this was all oil stocks, all the oil stocks would be forming the same pattern. And if you have one oil stock that's doing this, it hasn't even started to move up yet. Who do you want? Again, you have to ask the question, why? Why isn't this participating like these other? I'd rather get these others that look like they're already taking off. Anyway, that would be my argument on that one. Is it's cheap, but it's cheap. It's cheap for a reason. And look at this too. Look at this is what you could be stuck with. This thing could move sideways for 2 more years or whatever. It did have this spike up, and it'd be great if you caught that. But you'll catch it on these other stocks that are already taking off. And I don't know. Yeah, that would be my argument on that one. I got to watch it because if I get emotional like that, then I can scare people off from even asking questions in class. So please continue to ask questions. But like I said, I'll never embarrass anybody because I've been there before. But I will tell you this though. Sometimes I jump on people or jump like that because I remember when and I used to do this when I'd coach. I still do it from time to time when I coach. Is I would throw out a question that I knew everyone was going to answer wrong, and then I'd say no, that's not the right. This is the right answer. The reason why I teach that way a lot of times is because I remember in school, some teacher would point something out or ask a question. I'd be like, I'm going to be the one that answers that. I'm the smart one in the class. I'd raise my hand and I'd answer the question, and they'd say, nope, it's this. And I would feel stupid. I'd feel dumb. But guess what? Those times where I was stupid and dumb, the answer to that question, I have never forgotten because I now emotionally tied to that question. And because it was embarrassing to me, right? I was in front of class and it was wrong. I don't remember the questions I got right very often because so it could be a powerful learning moment sometimes to do that, but it could backfire too. I could have people that never ask me a question again. So anyway, hopefully I didn't offend anyone or tick anyone off, but you may never forget that type of explanation again, that you don't want to, if there's other stocks that are outperforming, why not go with them and trade them and they're more likely to work out. All right. Thanks, everyone. I think I got everything. If I didn't, make sure you email me the question. The benefit of emailing me the question is I don't have time to rant in a long email. It takes too much time, so it's less chance of embarrassment at that point. All right, thanks, everyone. Have a great week. We'll see you Tuesday for the next market update. Bye now.